All right, while our attendees continue to filter in, we'll go ahead and get started. I want to welcome everybody to the latest installment of TMC Tech Talk. Tom Galucci here, moderating today's discussion. Just a reminder, we'll be here every other Thursday where I'll have a special guest, really central to mortgage technology to kind of chat about current events, new innovations, consumer experience, as well as spotlighting our guests' direct contributions to pushing forward innovation within the mortgage industry. So as always, like to drop a fun factoid as kick off the latest episode. So for today, on this date in 1930, the controversial ninth planet Pluto was discovered by astronomer Clyde Tombaugh. And for the fans of the TV show 24 out there, today is also the birthday of fictional TV character, everybody's favorite, Special Agent Jack Bauer. So you already got a takeaway before we even got started. Just as a reminder, any questions, comments, suggestions, whether it be on future discussion topics or industry leaders that you'd like to see as a guest here on Tech Talk, you can feel free to drop that in the chat, or you can reach out to myself or anybody on our TMC team directly. Well, on that note, I want to go ahead and welcome in today's special guest, good friend and longtime partner of TMC. We have Lori Brewer with us, founder and CEO of LBA Wear. Lori, want to welcome you in. How are we doing?
Hi, Tom. Great. I'm very glad to be here.
Always glad to see you. Well, as we get started, I always like to kind of pick my guest's brain, just giving our attendees a little bit of color on their background. And you in particular have such a dynamic background from your time, in the Air Force. And first off, thank you very much for your service. But even going from there to kind of cutting your teeth in tech for military and civilian web development. Yeah, if you could, just to kick off, kind of give our audience, we'll say the condensed version of your background and how you ended up founding and growing LBA Wear into the company that it is today.
Sure, Tom. And I'll start with, I think Pluto has been deplanetized, right? Isn't that
Last time I checked, yep.
Okay, so Lori Brewer, and thank you for having me. My background was actually in architectural and structural engineering, but the biggest, development of software does relate to that. And one of the biggest things is the design and the creation of beautiful things. So in architectural engineering, they always stress form follows function. And we try to develop our software from the inside out. So form follows function, and we want it to look beautiful and operate beautifully. So in high school, I was awarded an Air Force ROTC scholarship. It paid for my school, and then also meant I was commissioned to the Air Force for 4 years. This was in the early 90s when the internet was just kind of evolving for the military and for the public. I worked my way into the webmaster position at what was the C-130 System Program Office here at Robins Air Force Base in Georgia, and fell in love with the fact that I could create a website that provided information to mostly Air Force mechanics and for that job around the world in a real-time manner. And it was magic, and I was completely hooked. So left the Air Force and joined this tiny little internet service provider when you used to have to go get modems. You won't remember, Tom, but you'd have to sign up and get a modem and hook it up to the internet. And so we helped families and businesses get on the internet for the first time. And many businesses had no website. So that's what I did. I wrote websites for businesses, and a mortgage company walked in one day and said, "We need an intranet." And I said, "Great." And then ended up working for them for 10 years. And that's how I learned the business from start to finish and how to automate a lot of the steps of the mortgage process.
I appreciate the presumption that it would be too dated for me. I certainly recall growing up in the dial-up era where you could tie up the home phone line just by being on the internet and getting into trouble for that. But kind of take me through a little bit like specific to LBA, kind of the founding of the company and really the growth from, the startup to where it is today.
Sure. So yeah, I kind of left that part out, but worked for the lender in 2008 with the financial crisis. That lender failed, and so I went out on my own, doing what I knew how to do, which was to program and write, create databases and write websites in this regard for mortgage lenders. Envoy Mortgage was one of the first companies to hire me out of Houston, Texas. They're still a client. And I wrote a myriad of different products. And then one of the things that came out of the financial crisis was the LO comp rule. So several lenders, it became a repeat request to have a solution to handle LO compensation. That's how our first platform was born, CompenSafe. Basically to react to the need in the marketplace. And I started the company in my living room with a laptop, and now we're about 45 individuals.
It's amazing and fantastic. I mean, it's been what, I think 5 years since we've been partnered together, and just to kind of watch your organization grow from a solution standpoint, as well as just the massive expansion of your client base. It's been a real privilege to partner and grow with you over that time. Kind of switching gears towards, I think, some current events driving the industry. From what we've seen, really lenders are hyper focused on kind of leveraging the power behind, the massive amount of data that's out there to be collected, whether it's internal functions or just through, the collection of a 1003. But it seems clear that there's still a ton of opportunity for tech innovators in particular to help support lenders with tools to kind of make sense of all the data, towards making better decisions business wise, as well as kind of enhancing profitability. What are you seeing out there within our industry as far as maybe quality solutions to support the aggregation of big data, in particular to support lenders' growth and really enhance efficiencies throughout the manufacturing process?
So true. And as everyone knows, this has been a strange 12 months. One of the things LBA does every quarter is a compensation study. And so we just completed the Q4 compensation study comparing 2020 Q4 to 2019 Q4. And there were some interesting metrics that popped out. The first, as you would expect, LOs made more money, shocking, because they closed more loans. And processors had higher bonuses because, as again you would expect, bonuses were raised for recruiting and retention reasons, because it has been a very competitive market, especially for the back office. But here's the surprising part, and I'll get to how this kind of leads into what I think will drive mortgage tech in the upcoming 12 months, is that LOs closed twice as much business, 106% more business compared to Q4 in 2019. And they did that with only a 27% increase in headcount. But processors who had to process that same business, that's doubling of the business, they had a 51% increase in headcount. That means for every 2 processors in your company, you had to hire a third. And so to me, that speaks very strongly to the fact that we've made some headway on the upfront process, the collection, the taking of the application, initial underwriting, collecting and running credit right off the bat. But we are still really far behind in the middle of the process, right? Because, why as in our industry do we have to hire up and down so much with every refi boom? And it's interesting to me that unfortunately, at least per a lot of the statistics, like operations, processing, underwriting, technology hasn't done a whole lot in the last 10 years to combat that, to relieve that, so that so technology can pick up more of the slack when we have these booms. And that, and that came out in that data. So that's what we're working on. We're working on that part, inside the walls of your business. So after the application comes in, you have to have supporting systems to make that process really efficient, so that you can close in a reasonable amount of time on your refis, and so you don't have to hire 51% more processors just to get through the volume. So those are kind of what we're working on, and I think that will be some trends. I think the POS and the e-closing definitely are going to continue to be trends, but I think we're going to see more of a focus on how do we make the entire process smoother, because you can't just take a really smooth online application and then expect it to get all the way to a magical e-closing without having some really good technology in the middle.
It's a great point, and you're right. I mean, we see so much innovation taking place, more consumer focused on creating an optimal user experience from app to e-close. And I think you're going to see a lot more of that over the course of this year. But you're right, there's a lot to be left on the table for kind of optimizing the the manufacturing and process within the walls of a lending institution, and not being so reactive, if you will, to these kind of refi cycles that, come spring of last year, everybody's looking around for top op staff, or looking to outsource fulfillment services just to keep up with or drink it from the fire hose with all the volume.
So true.
Yeah.
And it's hard to train up people in a short amount of time, if not impossible. You can't just bring on an underwriter in 30 days. So that's been
Right.
difficult.
Or kind of risk burning out your existing staff at the same point in time. It's a great point.
So true.
Mhm. Well, everybody, this is TMC Tech Talk. Tom Galucci here with Lori Brewer, CEO, founder of LBA Ware. Just a friendly reminder, any questions, comments that you have for Lori, feel free to drop them in the chat, and we will try to address those if we've got time at the end to cover. This is kind of a good lead in from, your last thoughts, kind of thinking forward to more automation. We hear a lot about machine learning, AI, robotic process automation. But I'm interested in picking your brain on, maybe some of these innovations that are at the cusp of large scale adoption within our industry. And, maybe from your unique perch, what do you envision kind of taking flight over the course of this year, and even segmenting that further, maybe more particular to lenders in the mid-market segment looking to keep up with their competition?
Yeah, to me, three big things, and then we're working on pieces of those three. But data, and not just oodles and oodles of data, but actually making that data smart and organized, which is a very, that's a skill, and you have to have knowledge around the industry, the terminology. You have to do a lot of work to define every piece of data, because all of our lenders, for example, a funded loan, when you dig into it, is not just the funding date. There's other pieces to that, like the wire has to go through. Well, if it's a brokered out loan, there's other pieces to that. Did we get the check? So there's a lot of work to make sure that you have a very accurate data dictionary, and that you have your data organized in such a way that you can then utilize it. So that's the first trend. The second trend is once you have that, you can have very strong actionable performance analytics. So now you can do things with that data. And that's where I think, we can hit on, maybe if we really design out smart applications from application to e-closing, that are using actionable analytics, then we might not have to hire so many people every time. but put those people maybe in software tech jobs writing. I'm not trying to say we don't want to create jobs, because we do, but actionable performance analytics, that's people and technology. And then the third one, and you already hit on it, Tom, and these are the buzzwords: machine learning and AI, which to me, AI is really, at its models, its algorithms, its ways to automate your data. So as everybody knows, and we just had a great webinar. We kicked off our 2021 webinar series with Mike Frattantoni from the MBA. And again, not surprising, but refinances are predicted to drop off in the second half. But part of what Mike talked about, and that's right, yeah, Tom just dropped in the chat, the link to that webinar, we have a recording, is on our website, and Mike did a fabulous job. Very interesting what's going on right now. One of the I thought interesting pieces, one, the housing inventory, and now I'm going to be quoted, but it's something like a month and a half is what our current inventory is. There's just no homes out there. There's a lot of discretionary money right now. So savings rates were up because people are at home. They're not spending on services like they used to be. So what Mike predicted is that we're going to see a deluge of spending like this summer or this fall, which is really good news, but will probably mean that rates will increase, and of course then refinances will drop off, but the purchase market should be strong. Okay, so with the purchase market strong and the focus we have on what we see as trends coming this year, data, actionable analytics, and machine learning, what we're concentrating on is our two platforms, CompensSafe and LimeGear. With LimeGear, we're taking the info that the lender has in its LOS and other systems and making it available in at-a-glance snippets for the managers and operational teams and everyone possibly outside of corporate, right? That needs that data when they need it to arm themselves to combat the competition and make more informed decisions. It's an age-old problem in the industry, and that's what we're trying to solve with LimeGear. It's just quick accessibility to data, and that data be transparent, understandable, and available. The second one is the people metrics, so tying those analytics with what every individual is doing and what you're paying them for. So unfortunately, what we also predict is some of that big jump in hiring will probably condense this year, and you're going to need a good way to look across your workforce and evenly assess the activities that are being done, the quality that they're doing it, and what you're paying for that. And so with CompensSafe and LimeGear, we pull that together, and we're working on that. And then lastly, and I'll stop talking for a minute, is machine learning, which is very exciting. And we have two main models right now that we have created, and they're both available in LimeGear. One we affectionately call the PTF 90 score. So that's predictability to propensity to fund in 90 days. So we take every loan and application, and based on a set of parameters that we pull on the loan, everything from DTI to credit score, but geographical location. It's not just your credit profile. There's a lot more to that, because someone with an FHA profile may be more likely to not shop you. So the score is around, we're predicting whether they will close with you within 90 days. So we have that score for all the loans in our pipeline in LimeGear. And then the second one piece for machine learning is predicting volume. So volume projections for the next month, 2 months, so that you can have that information for strategical planning for your warehouse lines and that type of thing.
A lot to unpack there. I'm not gonna lie, it was great. A couple questions just really off the riff here for you. I think of machine learning, and I feel like the industry as a whole is just getting to understand where it can be applied, within the manufacturing process. From your perspective, do you feel like there's maybe any areas of opportunity where we're as an industry not hitting the mark yet, or glaring opportunities out there where like machine learning could be applied that's just not really commonplace at the current moment?
I think, oh, there's definitely a lot of opportunities. Being in the industry that's very highly regulated, you have to be really careful about how you build those models. I've been involved with the engineer in Georgia Tech that we have that are writing our models, and it is very as an engineer, I've really gotten into how the machine learning models can be structured and how they can work. And I'll spare you nerding out. But there's a lot to unpack there, as you kind of said earlier. And there's all sorts of, wide open spaces that we could hit. Um, I wish, I wish and I think there can be a lot more focus on housing and how we can make housing more affordable and expand the credit window, right? You don't, we don't have to do that. And of course, you have Barrett and Vantage Score at TMC, and they're working on some of those things. And to me, that's one of the most interesting uses of machine learning is the ability to, expand that credit bubble to include more families.
Yeah, and it's really, you hit a great point. I think it's one of the use cases or potential use cases out there that probably doesn't get talked about enough. And it kind of relates back to like, Mike's insights from the webinar that LBA hosted. I didn't realize housing supply was that low, down to a month and a half at this point. And while that's a scary thing in itself, there's so little affordable housing out there. Like we crack up in the Cleveland metro. We've never seen homes within the last 2 years going above list price. It's just, unheard of. But there's such a gap out there beside, from where like, first time home buyers typically going to purchase in that range to where construction new builds are coming into the marketplace at. And it'd be interesting to see if there's other avenues where these emerging technologies can be used to kind of help support newer initiatives to bridge that gap, or to help bring down construction costs where more affordable lending can take place in new builds. It can only help to support that supply gap that we're currently facing.
Exactly. I think there's a lot of work still to be done, which is what makes the mortgage industry fun, right?
That's right. Always changing. And one other thing I kind of want to unpack with you too, you talked about in your remarks, um, like in the development of processes and having to create, like a mortgage specific dictionary of terminology, or just the build out of connectivity in different processes. It seems like it can be a really involved and dedicated process, especially if you're a lender that has multiple production channels out there. Yeah, I guess any high level thoughts on like, I, I worry that by the time you take to invest in making those connections and doing that build out, that the goalpost has moved, 10 yards down the line as far as where technology is taking us next. Yeah, outside of maybe sourcing more developers out there, yeah, anything off the cuff that you take away that we can be doing to, I guess, help speed up the adoption and implementation of emerging technologies for, lenders at a mid-market scale in particular?
That's a big question. um, Yeah, from the perspective of like a data dictionary, it sounds somewhat easy. Loan amount. Loan amount is loan amount with MIP. But you start going down the line, especially around dates and the definition of dates, it can get really tricky. The way we do it is we basically have a default mapping workbook, and we say, here's how most lenders do it. And then we allow our clients to change the definition as it maps into our system. And then in our system, it's always called this. So that's, how we handle it. But kind of around, I also wanted to, can I tell a story?
Sure.
So in 2020, my husband and I, we had not had a real estate transaction in 20 years. But in 2020, I bought a condo in Atlanta and refinanced our primary home, which hopefully everybody has done so far. But I, took this opportunity to, okay, show me mortgage industry, show me the borrower experience. I want to experience it all the way. I'm going to click every box. I'm going to do everything as automated as possible. So the condo I bought through an IMB, and I found the process was unfortunately pretty similar to the process I went through about 20 years ago. There were snippets of innovation at the beginning, and that was about it. I got automated emails, although they were very oddly dispersed when I received them. It was still a relationship game with LO, and it went smoothly, but I didn't pick up on a whole lot of additional innovation. My e-closing, which was in the height of the pandemic, we closed, I believe, in April or May, was in the attorney's office. Now we're in Georgia. We have to close at the closing attorney's office. And I did an e-closing, which consisted of him turning his laptop around and me hitting his screen, actually touching his screen, to confirm 2 forms. And then all other forms were signed with pen and ink. So a little disappointing, but then I refied our house, and I used a startup fintech company, and blown away. There was a complete difference between that technology first approach that they built out. However, it still took about 50 days to do the refi, and we really didn't have any complications. It just took a long time, right? So again, even though the process was cleaner, the communication was cleaner, it was well explained, there was still the period in the middle where it's like, oh, going back and forth and communicating and dragging it out. So anyway, I tell all that because I think we're making steps in the right direction, and there's still a lot to be done. And I think I feel like that our industry as a whole, if we can kind of keep things still for a little bit, the next decade, a lot of that will be automated, hopefully in such a way that if you want to close a refinance, you don't have to wait 45 days. So I know everybody has the same goal of going in that direction. And anyway, thought for what it's worth, thought I'd share that experience.
No, I mean, it's extremely relatable. I refied my house in the springtime as well, and it took longer than 50 days to get it done, and that was with a socially distanced in-person paper close signing. But it relates back to your early points in being able to leverage data aggregation to smooth out a lot of the inefficiencies in the manufacturing process, so that not reactive to volume fluxes and having to strategically push out the refi volume just to prioritize purchase, to be able to do both in kind of synchronization and create those target 30-day close windows or even less as we become more efficient. So it's extremely relatable. Reminder
Yeah.
to everybody here, TMC Tech Talk, Tom Glucci with Lori Brewer, CEO, founder at LBA Ware. Any questions you have, feel free to drop them in the chat. Lori, before I kind of move on to the next segment, I do have a question for you. It's specific to your offering at LBA. Can loan officers review the data? And I'm assuming this is going to be relatable to both Common Safe and Live Gear, but can loan officers review the data, or is your offering more geared towards upper management? That's probably more so on the Lime Gear side.
Well, great question. Both of our platforms are priced per loan so that we can offer it to all employees at our clients. So we sell to the company, and then our goal is to have as many people in the company using the software as possible. So yeah, CompenSafe as an LO, an LOA, a processor, a manager, a regional manager, they all are seeing what they're being paid, how they're being paid, so that they can the transparency of how their compensation was calculated is all visible and available the day the loan closes. So that is so powerful in that it really creates a sense of trust with your lender, because compensation plans can get really tricky and confusing, and not that any lender is trying to not do it correctly, but we've seen several spreadsheet models that it becomes very difficult, and then your LOs and your branch managers are having to do their comp over here on a notebook just to second guess it. And so we get rid of all that. It's available online. You can see it the day it closes. And Lime Gear, same thing. You're seeing your pipeline, you're seeing alerts. You know what your people are doing, you're stack ranking them, you're seeing scorecards. The pipeline is extremely important around making sure that if you expect the loan to move this fast and it's not moving this fast, it's easily color coded so you can pick up on potential issues so that you can address them before they become actual issues. And that is all visible to everyone across the industry, across the company. Of course, limited through a very powerful, actually, user matrix that you can set up on what you want people to see.
All right. And I also got more of a question, a comment than a question from your own Chris Castle. Want to know where my Alabama gear is, and Chris, that's a one-time thing only due to our bet. This is a Buckeye household, so maybe next year. Lori, you kind of led me down the path with telling your story about your own personal experience in relating to the consumer experience, and obviously opportunities out there to really enhance that. But from my perspective, I think, B2B functionality within our industry also has a huge impact on the consumer experience when you think about the flow of data and information through open APIs or integrations that exist out there through a lot of common partners within a mortgage company's tech stack. Any personal insights on maybe how and where we can do better through whether it be the enhancement of these integrations or enabling a better flow of data between integration partners that allows kind of for an expedience of the loan process?
So, well, I think most of the technology vendors now have fairly robust APIs, and having the API and the API documentation allows systems to talk to one another. And we've come a long way on that. So that is key and important. And then the openness of data, of course, through privacy and through approval through the client on what to share. But that is key, because if you're rekeying anything across systems, like, that's a red flag. There's ways to get around that these days. Yeah, Tom, I forgot your question.
Oh, just, if there's any, thinking
Any
from
way
like
you
a
can help
B2B
work better.
standpoint where we can kind of improve the flow to, I guess, help support a better consumer experience.
Yeah, I mean, I go back to if you're inside, if your functions on the inside are not well oiled and set up cleanly and organized well, then that comes out to your borrower. Like there's no hiding that. Your real estate agent is going to feel that as things get delayed or things are not communicated as quickly as possible. And that, to me and at LBA, where that's where we shine, we have a background in making that manufacturing process smoother by providing data to people that need it, so that you then as a lender can provide better service to your partners, your real estate agents, your builders, and your borrowers, but without powerful tools behind you or in your pocket or on your computer. Your hands are tied. You don't want to, if you pick up the phone, you get a question, you want to be able to answer the question. You don't want to say, let me get back to you, or I have to wait for that spreadsheet, or I have to call someone for that. And that's, it's not rocket science. It's really simple, but we see that it's still a problem in the industry. And that's what we're, trying to knock out, because then you're able to get ahead of things instead of be reactive with your borrowers.
That's a great point. Lori, I know we've talked a good bit throughout the discussion kind of around LBA's core solutions and how it relates to some of these challenges that our industry still faces on an emerging tech standpoint. But as we wrap up today, I wanted to see the floor in case there's any teasers you might be able to give out there about what the industry can expect from LBA over the course of 2021, obviously without giving out too much detail.
So, a couple of things. Of course, please visit us. Would love to show you Lime Gear and Compensate to see if it's a fit for your company. And I mentioned it briefly, but 2021, we're kicking off our webinar series, and we had Mike Fragentoni, who was amazing, and you can download that webinar from our website. And then our next guest is Rob Chrisman. So looking forward to that in Q2. We'll be sharing signups for that shortly. Also want to mention that LBAware hosts the TMC benchmark site for TMC, and there are continuous updates to that site. So if you're a TMC lender and you're not involved, please get involved on TMC benchmark, because it is monthly relatable data. So those are some of the things we have coming out, and our quarterly comp study is always one of the biggest eyeballs, a number of eyeballs on our website, which basically follows the trends of what's going on in LO comp as far as number of bodies and loans, and kind of an overview average of BIP rate. So we'll have that coming out in Q2.
We'll be excited for it. The quarterly comp reports are always a no worries. I mean, they're always a must read when they come out, and really great findings based on all the data that you're aggregating on originator and ops comp too. And yeah, for our members listening in, if you're not currently leveraging TMC benchmark solution powered by LBAware, highly encourage you to talk to your member benefit advocate about how to get involved, or even hearing from collective member peers within the network that are getting some really key insights for the organization from their engagement with TMC benchmark. So Lori, on that note, I want to thank you again for being my guest today. And to our listeners, be on the lookout for the podcast and YouTube links so you can listen in to our discussion on demand or be able to share out with those in your organization that couldn't join us today, who you think would gain value from the discussion.
Tom, appreciate it. Thank you. Stay warm.
Oh, yeah. Well, I would say you as well, but you're in a much warmer place than me. So we'll definitely do that. And to our guests, we'll see you next time. Join us with David Berner from Notarize on March 4th, Thursday at 3 Eastern. And until then, if you are talking TMC, you're talking tech. Be well, my friends.